case. You still got that dollar kind of inverse beta relationship there. Corn and soy earlier tumbled to a more than month low. Meantime, that breakfast bowl of Wheaties might get more dear. The U.S. Wheat Association says look out for tight supplies of the grain.
We are very close to the edge of supply-demand balance, and it would only take a poor crop in some major part of the world, could be the United States, could be India, but a poor crop in any such part of the world could tip the balance of supply and demand to quite tight stocks and thus higher prices.
Gosh darn it, there's so many variables. You still have to depend on the weather, and if you've got global warming, what kind of a harvest are you going to get? Winter, summer, wheat, whatever. Brady Sidwell is our friend on this segment of the show, head of advisor at Rabobank's Northeast Asia Food and Agribusiness Research, and of course Roger Grovely from LGT, Liechtenstein, Singapore, rejoins us from Singapore, the Lion City. Brady, hello.
Hi there.
Things are kind of, I don't know, things looked like they were on the precipice, on the verge of collapse, and then just as you hit the canyon, everything kind of went ping and went the other way, and we've sort of hit sort of a plateau on the way back up right now. How do you read what's going on around us?
Well, you know, it proves really that agriculture has emerged as an asset class, and commodities have entered the entire commodity complex as an investment opportunity, both playing the U.S. dollar weakness, strength, as well as inflation hedge. And I think the last couple of days, the discussion now is turning to will all the money that the governments are pumping into their economies to support these green shoots, will this cause inflation? And you know, it's interesting because commodities, agriculture commodities, play on whether it's based on the fundamental supply and demand. But as soon as the U.S. dollar strengthens, you see commodities collapse, and that's what we saw in the last.
Are we ever going to de-link ourselves from this dollar proxy? You know, where the dollar is, you know, seems to indicate, at least within a certain bandwidth, you know, where the commodity prices are going to be. I realize that the dollar is still the sort of you know, currency de franca, but at a certain point, you know, people do start thinking about supply, demand, about domestic issues, not just where the heck the greenback is going. Yeah,
of course. But you know, the fact is about the commodity market is it takes buyers and sellers, and they have to come together in one location. And for instance, the Chicago Board of Trade dominates the trading of most commodities, and that's where it's most liquid, given you have the most buyers and sellers located in these markets. The fact that most commodities also in New York, the BOT where sugar is traded, is all in U.S. dollars, and so I think for quite some time we're going to see that. When Brazil's president came over to China, I guess it was just a couple of weeks ago.
Lula, right?
Yeah, they're talking now about being able to trade renminbi directly with the real. So we may see some more of this, given the volatility in the dollar and the challenges that creates.
Let me bring in Roger from Singapore. He's been listening intently to this conversation. Roger, first of all, do you concur with what Brady is saying? You know, that the soft commodities, in particular the agricultural commodities, are emerging as an asset class in and of themselves. And you feel that most of this stuff is overpriced, right? I mean, you wouldn't touch this stuff with a 10-foot barge pole, given a choice.
Not quite right, because I published a report in February, actually, where I highlighted that beyond when the investors start playing the reflation theme, that commodities will recover, and also soft commodities. And then I also highlight a couple of companies also engaged in soybean processing, dealing, planting, like Wilmar here in Singapore, like Indofood Agri, like Olam, and all these companies. They did extremely well. Now I was a little bit more interested in the entire food chain, so to see where the soybean has been transported. They are transported by Handymax and Panamax vessels, which are companies offering at the Pacific Basin, and that's the Pan Ocean company. But having said that, it is an asset class, and it attracts more investors. But it's difficult because it's reacting very fast to political changes, to weather changes. So it's maybe quite tricky for non-experienced investors to ride the soft commodity waves. That's why I also often recommend our clients to participate in well-managed funds, etc., and not go straight into buying, like palm oil futures or soybean futures or whatever. It's very risky.
Okay. All right, back to Brady. What is the trend intact? You know about our good friend Jimbo Rogers, who likes to talk about, farmers going to rule the roost, and in an uncertain world, the meek will inherit the earth, or something like that. Is the trend intact, or is that not necessarily the case? You talked about Lula going to China and talking about doing their own transaction and kind of thumbing their nose at the dollar. We've also got changes in land policies. We've also got countries investing in other countries' arable land as well. New factors that we haven't talked about in the past.
Yeah. Unfortunately, I'm not privy to what Roger's saying, so I'm not sure what points he was making. But talking about agriculture as an asset class, of course, commodities and equities for the longest time, whether they be consumer or text or telecom, are asset classes based on commodities and also, of course, equities. But the emerging really asset class in agriculture is this farmland, government-to-government land grab, so to speak, banana republics, as they've been calling them. But there's also a lot of private sector investment that's going into this sector. And my last count, which is already a few months old, was that there are 90 private funds in different places around the world that are investing directly into farmland. And I think we're going to see more of this going forward, giving the, agriculture, in accessing agriculture as an investment has primarily been in the commodity space. But I think if having control or access at least to the real direct investment of land has opportunities, both the upside of commodities but also the upside of the appreciation of that.
Is that going to skew the natural pricing mechanism? You won't get 100% open markets then, right? I mean, you're going to have more concentration in fewer hands, a certain oligopoly there? Well,
however, if you look at the grain and oilseed production and export by country, it's already quite consolidated. On the grain side, for instance, the top 5 countries produce 65% of global grain supply. They export, the top 5 countries export 80% of global grain. For oilseeds, it's even more concentrated with countries, whereas the top 5 produce 80% and they export over nearly 95%.
Wow, this sounds like the rich-poor wealth gap sort of.
Well, but the fact is, a lot of these entities, governments or private funds, et cetera, who've been quoting food security as a reason to invest in farmland overseas, are actually investing in farmland in countries where poverty in the malnourished is the highest. So to see the motive here, and it's more really of who has the capital and who doesn't have the capital and who's in need of the capital, more than food security.
Brady, always good talking to you, okay?